Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Thanks for joining us again here at Ausbiz. Let's get across those developments overnight. Global equities rallying, oil prices tumbling on reports that the United States and Iran are nearing an agreement to end their war. Now, that buoyed investor sentiment on Wall Street, while momentum in AI-driven trades accelerated with the S&P 500 and NASDAQ again reaching record highs. The S&P 500 is now up around 8% since the beginning of the year, I should say, and the NASDAQ 11% higher since Jan 1. And the S&P 500 companies are on track for their strongest profit growth in more than 4 years. Now, stocks specifically, shares in advanced micro devices soared to an all-time high after forecasting quarterly revenue above expectations on robust demand for its data center chips. Shares of rival Intel gained, helping push the chip index higher, with having gained more than 60% this year. Corning surged on a partnership with NVIDIA to expand US production of optical connectivity products used in AI data centers, with NVIDIA also climbing, and shares in Supermicro jumped almost 25% on a stronger than expected forecast for fourth quarter revenue and adjusted profit. Hut 8 soared after the AI data center developer signed a 15-year lease worth $9.8 billion for its data center in Texas. And Walt Disney rose after the entertainment giant beat estimates for second quarter results, while shares of Uber accelerated after the ride-hailing and delivery platform forecast strong second quarter bookings. While Iran is reviewing a US peace proposal that would formally end the war while leaving key US demands that Iran suspend its nuclear program and reopen the Strait of Hormuz unresolved, President Trump has said they want to make a deal. We've had a very good talks over the last 24 hours, and it's very possible that we'll make a deal. And President Trump has subsequently claimed that Iran had agreed to his demand that they cannot have a nuclear weapon. Well, the president paused the US military mission to reopen the Strait of Hormuz to allow for negotiations to end the conflict, although the US has maintained a blockade on Iranian ships in the region. Now, the latest data in the US private payrolls increasing more than expected in April, rising by 109,000 jobs, and Eurozone services activity contracted in April for the first time in almost a year, hit by weakening demand and deteriorating export business as the Middle East war weighed on consumer-facing sectors. US Treasury yields fell, along with oil prices, and the US 2-year yield falling at 3.86%, the 10-year down to 4.35%. Australian 3-year government bond yields fell to 4.59%, the 10-year at 4.93%. The US dollar index down around 0.5%, while the Japanese yen jumping to a more than 2-month high, with the Japanese government spending around $35 billion over the past few days to halt the yen slide against the dollar. The Aussie is up to 70.4 US cents. Well, oil prices have fallen to 2-week lows on optimism about an end to the war. Meanwhile, OPEC's crude production fell to a 3-year low last month as the war continued to cut exports from the Persian Gulf. Output declined by 420,000 barrels a day. That's the lowest since 1990, driven by deeper losses in Kuwait and Iran. Brent crude futures down more than 7% at around 102 US a barrel. Gold has hit its highest level in more than a week. Spot gold trading at around $4,690 an ounce. Copper's up 3%, iron ore up 2% to 113 a tonne, and Bitcoin currently trading above 81,000 US dollars. So let's get across those latest developments. Ira Epstein joining us from Linn Associates. Ira, welcome back to you. So is this just more rhetoric? Because this is a memorandum of understanding. There don't appear to be any solid proposals put forward, other than, I guess, the idea of trying to end this war. But the sticking points remain the Strait of Hormuz and Iran's nuclear program. So what do you make of what you've heard?
Well, everything I'm reading, it is a memorandum, apparently, 14 points in it, single page. It's already changing because the president said he gave them 48 hours, 2 days to answer it. And just moments ago, I saw in the news in a conference that he was at, why would he put a time frame? He said, we always want to make peace. So you never know what's really going on with our president. Some of it, I think, is just plain miscommunication. Some of it's to keep you off base. At the end of the day, the off-ramp is the United States can say they have stopped the ability for the time being of Iran to develop a nuclear weapon. End it there. The Iranians can say that they have won the war, just as Ukraine has done with Russia. We haven't been able to defeat the Iranians. Iran has taken out their neighbors and can continue to take them out in their oil production. It controls and got something it didn't have before. It controls the Strait of Hormuz. And it may well be that the world decides that this is the get-off point. Let the U.S. say that they don't have the ability in Iran, or Iran agrees to not create a nuclear weapon, and everybody walks away. Iran controlling the strait, will they charge people? I think each country has to decide what they want to do with that. So there are ramps to get off. The big question is, does Iran want to get off, or do they want more? They have been very aggressive. They have won at the elements that they wanted to win at. And, people aren't saying that, but here again, I want to make that analogy. Ukraine, Iran, against these two big countries, we can't use nuclear weapons is the problem. If we could, and you took them out, and you did the unthinkable, that would change everything. But that's not it. Regular warfare is very difficult to beat an enemy like this.
Ira, taking a look at the market response, particularly in equities, pretty much saying that the war is over. They're concentrating particularly on that AI trade. Is that the way you see it at the moment?
Well, I can tell you that if you're a subscriber to my ETF videos, what you will see is you're pretty well loaded up in AI. That's where the action has been. If you're outside of AI, things aren't working so good. I mean, you can go to ServiceNow. Everybody uses them in AI, yet the stock can't get off its back. You can go to retail. Shopify hasn't done well, but RealReal's done real well. So we can look at it and understand that the market would be a lot higher if there were no war. That's the way to approach this. We started off the year and the talk was, could we get up in the S&P to 7,000, 7,500? The talk is now, how much over 8,000 will you be at year end? I'm not saying that's where you're going, but I am saying that is the talk. So people are getting more and more bullish. They think that the next phase is one where energy prices gradually come down. I think you'll be dealing with inflation for a long time. When the war ends, it's like throwing a light switch. People are going to realize that the cost of energy isn't going to drop dramatically. It'll go maybe down another 15%, but not much more than that is my guess, as you have to replenish the supply lines. You have to put back in and get now your strategic reserves in different countries that are going. None of this happens right away. And what happens if the war picks up momentum? Nobody's saying that. This thing can go on. Do I think the U.S. is going to bomb Iran? I do not. I think the president talks it. I don't think he'll do it.
Just in terms of inflation, Ira, what inflationary effects from higher fuel prices are you seeing in the United States at the moment? And what do you see? I mean, you're saying this is going to be protracted in terms of the inflationary effects. What do you think the likely policy response will be from the Fed, bearing in mind we've got a change of leadership?
I think that with the change of leadership and all that's coming, it won't matter. The end of the day, if you cut interest rates, you fuel inflation. What are we looking at? We're looking at labor markets with the ADP number that came out today. You got 108 or so, 108,000 new jobs. We're going to get the unemployment claims tomorrow. But people aren't letting people go. We're seeing that. The unemployment claims are at multi-year lows. So it's the exact opposite. So what you have to deal with after that is the fact that the inflation from the energy crisis is here to stay for a long time, probably through the end of the year. Let's face it, we're already through a third of the year. We're in the first, coming to now approaching the middle of May next week. And that gives you a lead time where how do you get this inflation down? I don't think you can right away. So I view it that gold comes alive probably the June, July timeframe. I don't think it's right now. I think right now you still have too much that can happen negative to it in terms of war. And normally you and I would sit here and go, well, war, that should be bullish to gold. It hasn't been. So why should the game change until the war ends? That's the first thing. The US dollar probably has to drop if there's peace on this. But without that, it's been holding resilient, not super strong, but holding. And I think that is the key that it has to do. Hold where it's at. You talked about the yen. They've already done 2 interventions. It was 35 billion reportedly by Bloomberg on the first intervention, but I think they intervened last night again. It could be another 10 billion or whatever. So they're doing what they have to. The problem is they haven't solved their problem, and that's high energy prices, and I don't see that going away. This correction today, well needed, but that doesn't mean this move is over. Tell me the war is over, then I have a different attitude. Until then, no. I think you get these type of bumps in the road and these good things that happen, but the stock market rally is based on AI, not the war ending.
Well, speaking of which, that rally we're seeing in stocks. So S&P 500 earnings growth nearing 30% this quarter. That is extremely impressive. However, how concerned are you with that concentration risk?
Very. But you play it. That's what you do. I mean, that's the life of a trader. You look to see which markets are making money. Give you an example. I was looking at the Spider ETF that does the data centers. It can't get off its bottom. Just doesn't move. Yet you look at HUT and the other companies that are building them, they're making the money. You look at the companies like NVIDIA up today rather dramatically. You look at Micron. The companies that are building the chips are fine. That too will have its day and time, but not now. This is like iPhone when they first came out. If you remember, we all had the flip phones, and then we got these fabulous new instruments, and it lasted that way now for decades. Well, AI is that event. AI is the event that people don't understand how powerful it is, and it's extremely powerful. I'm sure you use it like I do. I use AI every day, every single day. When I write my newsletter, be it fact-checking, rewrite this paragraph that I want, I get help with it. I love it. And I think most people that embrace it find that they do.
Ira, great to get across what you're seeing on the markets at the moment. Thanks for joining us from Linn Associates.
Thanks for having me.
Let's return to the local market ahead of the open here. So, another impressive session ahead when we take a look at S&P ASX 200 futures there, 1.1% higher. Building off those impressive gains we saw yesterday. But of course, we are still playing catch up, given over the past 2 weeks we have seen significant falls on the local index. Stay with us because we're going to get right across all of that in the open.